she a shoo-in now?
Well, I think markets have clearly anticipated that would be the case with the removal of Mr. Summers from the race. I think that might be a little bit too simple as far as markets are concerned, though, because I think the White House has shown a great deal of unenthusiasm for her candidacy, hence the reason why Mr. Summers moved up to the top of the list, despite the ongoing concerns that his nomination would bring a great deal of rancor, which ultimately has been his undoing. So I think we have to wait to see what the White House actually says here, because I think there are still ongoing compromise candidates out there, whether it be Donald Kohn, whether it be Roger Ferguson, whether it even be Stanley Fischer, although his age might preclude that. And of course, I wouldn't necessarily completely rule out Timothy Geithner, despite his consistent denials. Being the Fed governor in 2014 is not the same as being the Treasury Secretary in the depth of the crisis.
Indeed. Well, as you say, though, he seems to have ruled himself out. But just going back to the market reaction, European stocks opening up 0.75%, the US 10-year yield down 10 basis points to 280, and the dollar down. How much more juice is left in this trade, do you think?
Well, clearly we've seen a pretty aggressive reaction. As you say, 10 basis points off 10-year yields is pretty significant. But of course, we're also in a week when we are dominated, or should have been dominated, by the Fed, but for a different reason. And of course, in terms of the tapering debate, in terms of that prospective Fed change on Wednesday. I think we've moved a considerable distance already on the basis of this story. Clearly, it was in thinner markets. Japan has been off for Respect the Aged Day as well, which has exacerbated the move. I think there is a risk that we do get a little bit overdone in terms of the selling impetus. I think the dollar index should see pretty good support around the sort of the August lows as providing some support here. So I think the juice in terms of this dollar selling trade is looking a little extreme, and I think some of those crosses are also looking a little bit overdone, whether it be euros, whether it be Australian dollars. So I wouldn't necessarily want to chase the dollar lower at this particular point.
Is this dollar selling and the other moves, so the move up in stocks and bonds that we're seeing this morning, is that because Summers is no longer in the race, or because Yellen, the market thinks, is a shoo-in?
Well, I think it's probably a little bit of both. Clearly, the move in the dollar interest rate implied rates, it does underline the fact that markets were anticipating a certainly less dovish environment under a Summers-led Fed. I think clearly markets are hoping that we will see more or maintained monetary liquidity, and of course Yellen would be perceived as being in that camp, although it's been stressed overnight that she isn't that dovish, but I think it would be seen as more of the same, and that's the reason why we're seeing the dollar lower, and obviously asset classes which are benefiting from extreme and elevated levels of liquidity doing well this morning.